Sam Bankman-Fried, a billionaire and owner of one of the world's largest crypto exchanges, FTX, who was once called the next Warren Buffett by Fortune, has brought the entire crypto markets to complete economic collapse for what seemingly looks like a giant Ponzi scheme. Sam Bankman-Fried and FTX lent out over $10 billion of customers' deposits to his trading firm Alameda Research that went ahead and lost it all. And when this was discovered, it caused a massive bank run on FTX, causing their insolvency, and now they are filing for Chapter 11 bankruptcy. People around the world, including FTX's own employees and dozens of projects that held their funds in FTX, are now unable to withdraw it. Some have lost their entire life savings. And in today's video, I'm going to do my best to walk you through from the very beginning on when CoinDesk first released private documents that they had come across to where we are today, where FTX has just announced their filing for Chapter 11 bankruptcy, as well as talk about the ripple effect that's being seen throughout the ecosystem, where we are seeing multiple other companies, things like BlockFi, pause withdrawals as well. What's up, YouTube? Welcome back to my channel. I am Crypto with Nick. I'm a crypto enthusiast and DeFi investor, and my goal is to find the best opportunities across NFTs, DeFi, and Web3. This has got to be the craziest week in crypto I have ever experienced. We're going to be spending a lot of time on Twitter and different news sources putting a timeline together so that way we can all understand what happened here. We're also going to be talking about things that you should be looking out for and actions that you should be taking to keep yourself safe in the future. This all started when two of the world's largest cryptocurrency exchanges, FTX backed by Sam Bankman-Fried, as well as Binance backed by CZ, went to war, which may have been started all because of a tweet and an article released from CoinDesk. To give a bit more of a background, we also have to understand that Sam's crypto empire is broken down into two components: FTX, which is an exchange, also Alameda Research, which is his trading firm, and both of these were titans in their own industries. Now, what really set this entire thing in motion was this article published from CoinDesk on November 2nd. We can see here that Alameda has $14.6 billion worth of assets on June 30th, according to a private document that they received. And you might be thinking, 14 billion sounds like a lot of money. What's the problem with this? The biggest problem with this is that much of it is the FTT token, which is issued by FTX. This is the same scheme that brought down Celsius, which caused them to file bankruptcy. Now we can see out of the $14.6 billion worth of assets, the single biggest asset is $13.66 billion of unlocked FTT. Really, this is a token issued by FTX that people are supposed to use on the exchange, and it helped you save on trading fees. The problem with this model is as simple as this flywheel. FTX created a token and pumped up the token price by doing weekly buyback and burns. Then Alameda was able to mark gains on its balance sheet, showing how much money they had. They were able to show these gains to investors and then raise more cash. The biggest problem is that if the price falls, that's when everything crumbles like a house of cards. We can even see in this CoinDesk article that it's fascinating to see the majority of the net equity in Alameda's business is FTX's own token printed out of thin air. Now, of course, we know that Sam Bankman-Fried and FTX is a huge fan of Solana. We can see that other significant assets on his balance sheet, $3.37 billion worth, are large amounts of Solana's blockchain's native tokens, Unlock Solana, Lock Solana, meaning it's still vesting, as well as other tokens such as SRM, Oxygen, and FIDA. We can also take a look at all of FTX investments, and you can see it is staggering. See, the biggest thing with FTX is they do have $1 billion in assets, but for the most part, they're illiquid because a lot of these investment deals require tokens to vest over multiple year periods. Their investments touch almost every part of this industry in every single sector. And that's why it's really important to consider if you have positions in these projects, as well as getting updates from these teams about what does their runway look like and what do their treasuries look like. I even shared this photo to my Twitter, which goes ahead and breaks down all the investments by category, whether it's DeFi, NFT gaming, infrastructure, Web3. I see a lot of panic on Twitter right now telling people to dump the tokens of these projects, and I wouldn't necessarily do that immediately. Definitely get an update from the teams, but be aware, a lot of these investments already have happened, right? These teams have capital, they have cash. The tokens that FTX has, most likely are locked a lot of times, and as they enter bankruptcy, it could be years before they're even given an opportunity to liquidate them. Now that we have some background on the CoinDesk article suggesting that Alameda Research could be facing liquidity issues, we need to go back just a few days to October 29th, where SBF released this tweet. Excited to see him repping the industry in DC going forward. Is he allowed to go to DC? He is insinuating that because CZ is a Chinese company that he might not be allowed to travel to DC. Sam Bankman-Fried was one of the largest crypto advocates on the Hill, working with regulators to turn them against CZ, and he was already extremely unhappy. He was so unhappy that he tweeted a few days after the CoinDesk article that as part of Binance's exit from FTX's equity last year, they received $2.1 billion of FTT and that they were going to liquidate all of the FTT on their books. He mentioned specifically that due to market conditions, they expect this will take months to unload, meaning that nobody was going to touch the FTT token for months and that he was basically going to be able to completely crash it. Now we need to introduce Caroline, who was the CEO of Alameda Research, who held billions of dollars of FTT on their books. I think even the craziest twist of Caroline being CEO of Alameda Research, that this article came out that Sam Bankman-Fried's cabal of roommates in the Bahamas ran this crypto empire, and him and Caroline even dated. Because Caroline knew that if the token price of FTT dropped too much, that they would be in serious problems and face serious liquidity issues. So much so that she tweeted at CZ that if they were really not trying to make a move against their competitor, which is what CZ claimed, that Alameda would happily buy all of the FTT OTC, meaning a private deal that does not impact the markets, at $22, which was the fair value price of the token on this day. We can see here the chart of FTT's token. We can see here at around $25 back on November 4th and had been trading around these levels for quite a few weeks. Essentially started to death spiral down all the way down to $2 at this time. And it is speculated that one of the ways that they are trying to create a buy wall on FTT, meaning to keep the token price afloat, is that they were selling and dumping Solana. We can see here a massive drop on Solana, as it's speculated that they were selling this to, of course, hold the buy wall for FTT. Caroline, the CEO of Alameda Research, was trying to instill some confidence in the markets, claiming that that specific balance sheet was only a subset of their entities, and they had greater than $10 billion worth of assets that aren't even reflected here. When people saw the token price of FTT started to drop, people started to panic. And Sam tweeted out on November 7th and has since deleted this tweet that a competitor is trying to go after them with false rumors and all of FTX is fine and don't worry about it. He even tweeted out that FTX has enough to cover all of its client assets, which would make sense because they're a crypto exchange and you're not supposed to invest client assets. Also says that they are heavily regulated. They have over $1 billion in cash and have a long history of maintaining client assets, which couldn't be further from the truth. All of these tweets are deleted, and we have found all of these claims to be completely false. People weren't buying it because in the last 72 hours, they had over $6 billion withdrawn from the platform before they had to pause all remaining withdrawals. CZ and Binance on November 6th mentioned they're going to dump the token. On the 7th, people withdraw $6 billion from the platform, and by November 8th, Sam tweets that they are essentially insolvent, and they have created a strategic transaction with Binance pending due diligence for Binance with the intent to acquire FTX. We can see here, this is CZ confirming the same thing, and to protect the users, they signed a non-binding intent to acquire. We would learn more about that this was not going to be possible, and he was going to walk away from this deal after discovering the massive $10 billion hole in the balance sheet. CZ also went ahead and sent this internal memo to employees. I'm not going to read the whole thing. Feel free to pause it, but essentially wanted to highlight his sentiment towards it. He basically claims that this was not to wage war on their competitor and had no intentions of causing their collapse, that he had no idea of their true insolvency issues, and this was all news to him, that when Sam first called him, he thought it was to make a deal for the FTT tokens and instead was to ask for help in terms of the strategic partnership to solve their liquidity crisis. Now, CZ says this perfectly. Do not view this as a win for us because when confidence has shattered across the entire markets, there's really not a lot to be rooting for. CZ and Binance cannot thrive in an ecosystem where people don't want to touch crypto with a 10-foot pole. where it's going to make getting licenses even that much harder for exchanges that want to do good and honest work. And regulators could potentially come in and over-regulate the industry because of what has happened here. We learned that the deal is not possible with Binance because after the due diligence was done, we can see that the firm owed about $10 billion. It had a massive $10 billion hole on its balance sheet. You might be asking yourself, how the hell do you lose $10 billion? Let me show you the clip from Caroline, the CEO of Alameda Research.
Like elementary school math, being comfortable with risk is very important. We tend not to have things like stop losses. I think those aren't necessarily great risk management.
Doesn't have stop losses. You can see here that FTX at one point had $16 billion in customer assets and had lent more than half of those assets to his sister company, Alameda Research. Now that all of this has comes out, Sam tweets a thread on November 12th apologizing, saying, "I'm sorry, that's the biggest things," and tries to give insight into his rationale. So first he mentioned that this is all about FTX International, that the non-US exchange, FTX US, which was supposed to be a completely separate entity, is completely fine. Don't worry about FTX US. And this is what many people believe true for a few days. The result of this, and not understanding that he had lent $10 billion to Alameda, was that they had poor internal labeling of bank-related accounts, and that his sense was that they were at a leverage of 0x, and that they were actually leveraging their balance by 1.7 times. His reason for losing $10 billion was that we mislabeled account. That is the reason. I can't even comprehend that, honestly. But he goes on to say that Alameda Research is winding down and that soon there won't be any trading on FTX anymore. Now that all this is out the open, people are like, this is insanity. We even have Sequoia Capital, one of the world's most prominent venture capital firms based in Silicon Valley, who sent a letter to their LPs saying that their $150 million investment in FTX, that they are going to mark this as a zero. And that was because they believe that any opportunity to pay back client deposits should come first. Just one day later, announcing that FTX was going to stop trading, Alameda Research was winding down, and FTX US users were completely safe. Just one day later, on November 11th, filed today, FTX US, and Alameda was going to be filing for voluntary Chapter 11, which is bankruptcy. And this set off another massive twist in the story because everyone assumed that the US entity was separate, and he claimed it had backing client funds one-to-one, all was well, and I'm sure a lot of people did not move to take their money off right away and now got hit with this. If you want to see a list of 134 firms that are included in this bankruptcy, Blockworks put out this incredible list. You can scroll through it, comb through it, however you like, but this is insane, the amount of companies that was involved in this empire. You know, and a lot of people believe that FTX and Alameda blew themselves up months ago because Sam, who was the previous co-CEO with Caroline over Alameda Research, actually stepped down from the position on August 24th. And a lot of people thought that this was a bit fishy. Why would Sam be stepping down? But complete speculation at this time. Perhaps Sam knew that things were coming to an end soon. Now let's do a quick recap of all these events that transpired over a 2-week period. Everything started when Sam Bankman-Fried tweeted poking fun at CZ, and it was shown that he was working with regulators to turn them against CZ and Binance. Then CoinDesk received a private document of Alameda Research's balance showing that they could potentially have liquidity problems. They were using FTT's token, which was being issued by FTX, to go ahead and raise capital, and this set off alarms for Binance, who claimed that they were going to dump all the tokens. This, of course, sparked fear in the entire markets, and people started to withdraw billions of dollars from FTX overnight, which led to their insolvency and then pausing withdrawals. And when finally Binance wanted to acquire FTX, it was shown that they had too large of a hole on their balance sheets, upwards of $10 billion, and we learned later that those were customers' deposits being gambled away. And in the end, Sam Bankman-Fried wanted to give all of his fortune away. He has dropped from his net worth from 16 billion to about 900 million, and it seems like he was successful at that endeavor. Probably not the way though he anticipated it. And now finally, we need to talk about the ramifications this is having on the rest of the ecosystem, especially if you remember months ago when we saw Terra Luna collapse and Three Arrows Capital collapse, that all of the centralized platforms such as BlockFi, Voyager, and Celsius started to go bankrupt. Sam was coming to rescue both BlockFi and Voyager, which now seem to be in big trouble. BlockFi, from Flory, which is the COO of the company, on November 8th says all of the products are fully optional and not to worry. And on November 10th, just 2 days later, they said they are shocked and dismayed regarding the news of FTX and Alameda, and that they are not able to operate business as usual and will be pausing all withdrawals. And this was because Sam and FTX was loaning BlockFi $400 million line of credit, and it is speculated that BlockFi had all of its assets on FTX, which of course they would not be able to access at this time. And Voyager, who was expecting a $1 billion saving from FTX, now is reopening the bidding process, given that FTX, of course, is going bankrupt and is not going to be able to facilitate this deal anymore. Now remember, FTX was one of the largest empires in crypto, and dozens of projects held their treasuries or portions of their treasuries on the platform, and we are now seeing that to surface as well. We can see here that Multicoin Capital, another large VC fund, we can see that 10% of its entire assets under management are now stuck on the exchange. We can also see Genesis Trading. This is an extremely large market maker. It is very serious if these people go bankrupt. They also lost $175 million, and this is coming out the next day, where previously, the day before, they said they only had lost 7 million. So it jumped from 7 million to 175. And I'm sure we are going to see a lot more stories like this surface over the next few weeks. Now, everyone across the entire crypto market is, of course, completely spooked. People are yanking their money off exchanges left and right. But what DeFi Llama has done for us is start to aggregate a lot of the latest news and reports that exchanges are coming forward with to prove that they have the appropriate assets under management and can meet all the client withdrawals needs. We have already seen reports from Crypto.com start to release some of their cold wallets. We can see here $2.8 billion in cold wallets. This is not necessarily inclusive or gives you a full picture, but very interesting to see they hold 20% Shiba, more than Ethereum, but nonetheless, they are starting to come forward with some reserves. You can also see here Crypto.com. We have Johnny, who is the CEO, has says that protecting funds is their top priority, and they will release a Merkle Tree proof of reserves in about 1 month. KuCoin has also started to show some transparency though. Again, $2.8 billion of the current assets that they've released so far, and you can go ahead and see the breakdown here. And of course, Binance, being one of the largest player here, has shown reserve wallet addresses close to $69 billion, mainly in the form of Bitcoin and a few other coins. Unless you have a strong reason to keep your crypto on an exchange, I do still personally trust Binance and Coinbase. Those are probably the only two I can say without a doubt at this moment that I would still trust. However, I think it's really important to understand and learn how to become self-custody with your crypto. You can prevent these issues from ever happening to you if you learned how to move your crypto off exchanges onto something like a hardware wallet, like a ledger. I'll have an affiliate link in the description. But if you run into issues or you need some help or have some questions, be sure to join the free Discord or DM me on Twitter. I'd love to help you out. But this right here will ensure that you will never be one of those people that loses their crypto from an exchange going bust. And you can see they have so many different products. I personally have both the Nano X and the Nano S Plus. Be sure if you do buy Ledger that you do buy it from the official site. Do not buy it off Amazon or eBay. There have been known to be fake devices sold on those websites that will steal your crypto actually. So be sure if you do buy one, it's only from the official site. And with everything happening and people losing complete confidence in centralized exchanging, I think we're going to see even a larger shift to decentralized exchanges where everything is on chain and completely transparent. My favorite being GMX. I've made a ton of videos out this. They did over $1 billion worth of volume in the 24-hour period that all of this was happening. I think you're going to see a large shift to these exchanges because everything is on chain. You can of course see everyone's wins and losses. There's even a leaderboard. So definitely recommend checking out something like GMX. Gains Network is one of my other favorite decentralized ecosystems over on Polygon. They've done over 20 billion in volume. Remember, everything is on chain. You can even see every winner's win and loss. Definitely recommend checking out both GMX and GNS. I'll have referrals to both of these in the description. It will help you save on fees if you're trading on these platforms. Now, I think the only thing I really left out of this story was Justin Sun being his usual slimeball self. And that was because he partnered with FTX to allow people to withdraw to the TRX ecosystem, but this drove up TRX to an extremely high premium where people were essentially converting their accounts to cents on the dollar. Extremely slimeball move. If you want to learn more about it though, you can of course go visit Justin Sun's tweets and learn a little bit. That wraps up today's video. I really hope you enjoyed. I tried really hard to put together a timeline of everything from the beginning to the end and give a simple understanding of what took place here and where we are today. This definitely took a lot of work. So if you have any feedback or comments, definitely send me a DM on Twitter. Come join the free community Discord. I'm extremely active there and I would love to have you. But anyways, see you in the next one. Cheers and happy farming.